Welcome to the April top 10 Japan headlines. It's coming right up. Not a shock here. However, what is interesting out of that headline is METI is considering more subsidies to protect consumers from shock of prices. There can be a lot of subsidy. Next up, METI plans on eliminating more than 100 retailers with licenses. So the reason for that is there's give or take 180 retailers in Japan with licenses with no customers. We call them the dormant retailers. So Medi is going to announce sometime the end of the year, first of next year, they either have a year to get a customer and get active or send their license back. So next headline on futures, uh, I had predicted a year ago that it would reach spot market. So far, I'm on track. I'm going to predict now, a year from now, it'll be about double what it is today in volume, far exceeding spot market. So in balancing market, they're shifting to what matches more like the spot market. So the bids are due the same day or the day ahead, and now it's 30-minute increments instead of all day. So they'll get even shorter as time goes by. So the last oil-fired unit, which is over 50 years old, it's amazing it lasted this long. So it's not a particular shock that's been taken out of service. So of course, Japan's been all in on hydrogen and they've been spending money on subsidizing getting it off the ground so that it becomes economical at some point. Got a long way to go. Uh, they did change it now to where funding for subsidies, etc., has to have a Japan company involved. Sorry, Australia. Surprisingly, if you recall back a few years ago, Mitsubishi won the first three offshore wind bids, followed by exiting all three offshore wind bids, which caused METI to revise the rules. Uh, Now they've gotten out of all their onshore and offshore wind. So this is interesting. The government is pushing for small modular reactors, and companies in Japan, especially the data centers, are pretty interested in them. However, the nuclear authority in Japan has no safety rules for these things, so they're not actually legal in Japan. So they've been telling everybody, yeah, go invest in somewhere else, like the US or some other market. Kind of an interesting twist. So this market's now live. Uh, what's interesting is it's a carbon market, whereas the non-fossil fuel certificate is an energy market with things like hydro and nuclear, wind and solar. So how the two play out together will remain interesting for the next couple of years. So traditionally, corporates or the industrials buy every year, once a year, and the contracts start April 1st. The most common product by far is what they call fuel cost adjustment, where the price changes every month based on a coal and LNG formula. So it's really a floating price. So the interest in the last couple of years now, the futures is much higher in what I call hedge products, fixed price, block index, traditionally and others. It has become more and more common. And for obvious reasons, with the price spiking now in the spot market, the corporates are calling for fixed prices on a higher and higher level. So I think that's going to really help that the hedge products take off. So thanks for watching.